Okay, as we cruise along here, we've got the starting point hopefully all done for everybody, and we're on to payroll. Okay, as you can see, there's only a few orange spots up here, but there is one down here in the gold, that workers' compensation, that you're also going to need to update. And we might have a couple changes on the payroll for years 2 and 3. We'll take a look when we get there. So, first thing, please, whatever you do, do not put anything in for owner's pay. Okay, and again, it's a kind of a teaching moment here, and what I'm going to tell you is not an absolute, but it's nearly an absolute, and that is that generally, almost always, if a company is not a C corporation, there isn't pay that's called pay, okay, to owners. Okay, they're called pass-through entities, so all the profits or losses then flow through or pass through to the owner or owners, and they get paid through distributions. Okay, because they're going to pay taxes on the whole amount of what the company makes, no matter what they take out. You know, the company might make $100,000. They take out $50,000. They leave $50,000 in the company, but they're still going to pay taxes on that full $100,000 profit. Okay, and so we show that when we get to the cash flow, and please don't put anything in there. Okay, if you think you're an exception to that, like you are a C corporation or for some other reason are an exception to that, let me know. But otherwise, please don't put anything in for owners. Full-time employees. Okay, the thing here, all you're going to do is tell me, if you're going to have any employees there as a full-time, what you plan to pay them. I think minimum wage in Montana is $8.75, so probably better be at least that. $9, something like that. And estimated hours per week. And I think full time's generally considered to be anything maybe over 30 hours, I think is the legal definition, somewhere in that neighborhood. I might do 35, right? And I might have one part-time employee that, also gets paid minimum wage, and maybe they work 15 hours a week. Okay, there. It does all the rest of the work for me, with this exception. Okay, workers' comp. We need to plug a number in there. We pay workers' compensation for all of our employees. And workers' comp is a no-fault insurance that's just designed to compensate workers if they get hurt on the job, no matter whose fault it is. So it's called no-fault insurance. Okay. And it's set up. It can either go through the state or private companies. It kind of just depends on how the business wants to set it up. And for certain companies, for most companies, it's generally a fairly low percentage. And if you've got an office worker or a retail clerk, those types of positions are, a bank teller, they're considered pretty darn low risk. Right, unless they stub their toe, and even then, it's probably not going to be a real expensive injury, right? Of course, there's exceptions to those things, but for the most part, those are pretty low. Let's say 2 to 8%, right? So plug a number in there, and again, you could probably Google it and get some ideas about where it might be. The one site I found, it did it in per $100, so it'd be like $2.79 or something like that, which would be at 2.79% in that case. So, take a look, take your best guess. At the other extreme, roofers, I think when I looked at the one I looked at, were about the highest, and I think that they were about 70%, somewhere up in that neighborhood, because roofing's a very dangerous occupation, and when injuries occur, they're generally fairly bad. Okay, so we just plug in a percent. I'm just going to plug in 5%. You can see that fills it in for me. I'm done with the first year payroll. The only thing I need to do is come over here, and why they did this in the program, I have no idea. But they have, full-time employees growing. wages growing at 20% the first year, 30% the next year, part-time 10%, and then 30%. That's all fine and dandy, except it goofs it up down here, okay, where these are all 20%. Um, it's not going to be a big dollar difference, but it's incorrect. One easy way to fix it would be to change that to 20%, okay? Change the dollar amounts just a little bit. Obviously, it did up there, okay? But if you want to, my point is this, those seem like big increases, and they are. They're huge increases. I don't think I'd want to give my employees that kind of an increase. But what I might want to do if I do that is for sure not only make the change there, but then also if I change it up here, keep it consistent between the part-time and full-time. I know that may not be how it is in real life, but do that. Otherwise, we'd have to change the formulas down here, and it gets to be a little bit complicated. And then same thing, change this to match whatever the increase is you have for those up there. So I'm going to do 10%, and I think I'm going to do 10% for both years. Okay, so I just changed these top four, that are currently at, they were at 20% and 30%. So those are the only four that I changed. Down here, these stay relatively consistent. 3% increase is what they're estimating for workers' comp, and health insurance, if we had any, we don't. Okay, so that's it for the payroll. Okay, relatively simple, right? The other one that I had, and it kind of skips us over, but I like to do that. I like to get to this so that we can start plugging these things in. So we'll take a look at the operating expenses. The operating expenses are just kind of the normal monthly expenses that you're going to have, and this is pretty well. They give you a pretty good list over here. This is one of the cases, however, if you need to change or want to change one of these labels over here, that's okay. If there's something here, for example, you're not going to rent or lease a vehicle, and so you wanted to change that, that's fine. If you don't have any licenses and you wanted to change that, or if you want to give miscellaneous an actual title, you can do that. Okay, but otherwise, these are monthly expenses, and for a lot of these, they're going to be, geez, I'm going to have, $100 a month in advertising expense, and I'm going to do that every month because I'm going to run a newspaper ad or send out some flyers, whatever the case may be. Car and truck expense, that's going to be pretty consistent. Okay, except, in the 6th month, geez, I gotta take it in for maintenance and do all that other good stuff. Man, I might have a big month there. And then I'll go back to my $50 a month, right? Okay, so just think it through. As you go through all of these. The one that's this insurance other than health. If you go back here to your starting point, you had a prepaid insurance premium. Let's say you did the $1,200. Then you wouldn't have a monthly expense because that $1,200 is actually going to get amortized for the year. Remember I told you insurance agents, they're kind of weird. They like to be paid ahead of time. So you're going to leave this blank, but then when you get to the end of the year, you might have to pay your insurance again. I'm going to estimate that it goes up a little bit, so I'll change that to $1,300. Okay, so that might be the only one that's not kind of regular. But some of these things, for some of you, they may be seasonal. That's fine if your business is seasonal, or if you're travel, I've seen people in the retail clothing, and they're maybe in April or probably earlier than that, February and September, they go to shows, fashion shows or whatever the case may be, right? And so those could be irregular, and they could be during the different times of the year, and just plug it in those months where you think they would be at least at your best guess at this point in time. One thing I get, I'll get a lot of them back that won't have any office expense. Just about everybody's going to have a little bit of office expense. Today's day and age, you're probably going to have a computer. You're going to send out invoices. You're going to give receipts. You're going to have that kind of stuff that you're going to need. Point of sale. You're going to need ribbon for your receipts, et cetera, right? Maybe low, but just about everybody has some office expense. Just about everybody has some supplies. Okay, supplies, keep supplies and inventory different. You won't see inventory on here, right? You had inventory over here, and inventory will take care of itself on a month-to-month basis. Okay, the program just assumes, and we normally would anyhow, that your inventory will be replenished. Okay, as you sell it, it's going to be replenished, and it's going to be available, even as you increase sales and whatnot. So don't worry about the inventory. Supplies are just those things that you use internally, like cleaning supplies, shop rags if you're in a if you're in a garage type of a thing, paper towels, your mop bucket and those types of things. And some of those you may have bought up front, your brooms and all that. Hopefully you had that in your starting point. So this might be just more of the monthly, toilet paper for the bathroom, paper towels for the bathroom. For most of us and for most jobs, it's probably not going to be a huge expense. There could be some exceptions to that where supplies would be a big deal. Rent, if you're renting, of course. Okay, if your rent deposit included first month and last month's rent, you might actually not start this then until month 2, right? Because your first month's already been paid. Licenses, again, those might be a periodic thing that would only happen once a year if you have to renew that. Legal and professional services, hopefully you wouldn't have any legal expenses, but maybe you just pay your accountant every April when they do your taxes. That's a very good possibility. Commissions and fees, only if you have that type of a business, car dealership or something that pays commissions. Maybe contract labor. Most of you probably won't have that. That kind of covers all of them. The rest of them down here, it's going to take care of itself. Okay, so any of these white cells you're not going to have to mess with, so I wouldn't worry about it. You get to years 2 and 3, you'll see that these are all gold. It's just built in, regular 3% increases. I would say that, leave these alone. 3% is a reasonable estimate of what might happen in terms of increases. There might be some exceptions, for example, your rent. Gosh, I'm going to sign a 3-year contract, so I'm not going to have any increases in my rent, right? Okay. And so you might go through those and you could sure adjust those a little bit. Just adjust the percentages, pretty simple. That's it. Okay, for those two basic worksheets. You got your payroll and your operating expenses, although it covers 4 worksheets. Not a lot that you have to fill in, and again, take some time, think about it. Refer back to the video if you need to. Thanks, and see, I'm going to send this out beforehand, so have a happy President's Day.